Bitcoin's now exceeded the largest correction in dollar value for this cycle, down now $35,200, and that represents a 28% loss from the highs. Now, there have been several key indicators that have been broken for this cycle. However, there may still be a chance that we see higher prices, but I don't think that is going to come without some further losses. I want to cover where this thing could land, where we could find this low, reasons for why, and what you can obviously look out for. Like and subscribe if you haven't already. This is your home of macro cycle analysis. But today I'm just going to cover mostly Bitcoin. And we're going to be comparing this against other assets which historically have shown lows for Bitcoin. So let's take a look at Bitcoin at the moment and recap the signals that we've been covering for a downside. So basically for the downtrend in this supposedly macro bull market, because we haven't had a breakdown of the 50% level at $71,000. So that is going to be the key point there. So the indicators we have been following for some time, some of these may be new to you, especially if you're new to the channel or you've only seen the videos a few times, but I'll cover them quickly because I recap them in most other videos. Is firstly the macro 50% level, which I just mentioned there at $71,000. The second is the weekly 50% levels. That was at $100,400. That was the breakdown, and now we're cleanly underneath that. A couple of other areas that people watch, of course, are the 50-week moving average, which has broken, and there is now a weekly close underneath the 50-week moving average, which we know many traders follow. So if we take a look at that, there's a close underneath the 50-week moving average. Hasn't happened through this entire cycle after it broke above it, and many would consider that the cycle is over because of that. Now, this doesn't take into account any sort of rallies. There's obviously going to be rallies from this point, and from today there could be a rally, which then people basically get a little bit giddish, greedy, and think things are going to turn around for them. I don't think that's the case yet, and I want to explain why and where we could see a low begin to form. The swing charts are clearly down. We put on our GAN Swing Pro here, and we can see that the chart is down on the 2-week. We've got the 1 week that is down, and then in some of the cases of the dailies, we've also got some downtrends forming there. We don't have it forming yet on the monthly, and a monthly downtrend, we've got a turn in the monthly chart, but we need a breakdown of the $74,000 level, which of course very close to the previous top, and the 50%. So there's a lot that would happen around that low to mid $70,000 range, which would really swing the macro to the downside. We've seen it several times before when the 50% level breaks and there is a monthly close underneath that level. Case in point is our previous cycle. We've got the 50%. There was a breakdown of it here at $34,000. That's obviously before the next data comes, but each of these months closed just above it, held the line, and then we saw a new all-time high. Wasn't very much, but enough to get everyone excited again. Then falls, hits the 50%. You can see the monthly closing on it, and then a rally, basically giving you that macro lower high, and things begin to fall again from that point. So the next thing is the volume and the ETFs. We've seen the volume increase on the down bars. So you can see these red ones here. There is an increase for October, highest volume. You have to go all the way back to the April low. So not a great sign that selling pressure picks up on these down moves, especially from all-time high prices. We're just over halfway through November, and the volume is very close to several of the other months around these tops. I dare say by the time we get to the end of November, this volume is going to be third highest in these last 6 or 7 months, if not second highest. So we've got a bit of work to do there for the bulls to turn it around. The ETFs have obviously been outflowing as well, so more volume there, and I've covered in previous videos the differences and how we use that as a contrarian indicator, but also when we're watching for these sort of turning points. The US stock market is going through a bit of a tough period on the daily chart, and it continues to grind around 6,700 points. We've been tracking this against the 5-year repeat, so the fractal. That's 2020 in the red, and in the white, that is the current prices, and it's basically been doing exactly the same. This has shown the consolidation through this period, which Bitcoin has essentially not been consolidating. It's been distributing, which means there was going to be further downside, putting it in a technically weaker position. But for the S&P, this is showing upside. So if the S&P does continue higher, you need to see Bitcoin also turn around and put in some higher highs from that point. Otherwise, it's going to continue to lag and therefore see further downside. Alt season, well, that hasn't come about, has it? MicroStrategy, that has been another very strong key indicator that the cycle would at least top very soon. And MicroStrategy is here. You can see that in the prior cycle, you get an all-time high for strategy, then a lower high when Bitcoin puts in its high. So we can show that with adding Bitcoin to the chart. We can turn off the volume just to see that. There is Bitcoin, there is the all-time high, there is MicroStrategy, and there is MicroStrategy's lower high. Same deal happened again. Move this is MicroStrategy top, MicroStrategy lower high, Bitcoin all-time high at the time, and then more higher highs. So you begin to see a divergence in the strength of MicroStrategy, which then, for one reason or another, you get to the downtrend for Bitcoin, and that has been the exact same case this time. Now, I think MicroStrategy's got a lot further to go, maybe somewhere around 80 at an extreme, but let's keep watching to see if it gets into this zone between 100 and 180. So to me, that would bring up the first area that we're watching for a low for Bitcoin when MicroStrategy begins to base, like it did in the last cycle, and that happened from May, and you got another low in June. You can zoom in here. And then there was a final low in December. That's giving you a good signal there that the market is finding some value in purchasing MicroStrategy again. Now, huge caution here for MicroStrategy at this stage of the cycle. And the cycle I'm referring to is the 18-year cycle. Bitcoin has not been through a peak of the 18-year real estate cycle and into a collapse. So we need to be very cautious now over the next 1 to 2 years to see whether there is going to be further liquidity coming into risk on assets, or if the money or the liquidity is looking for safer investments, or it's getting drawn into more of the narrative, the AI bubble, right? It might not even be in a bubble. Things don't seem as crazy as they did at the dot-com bubble, but nonetheless, a lot of the liquidity is going into AI. So we just want to understand over the next 6, 12, 18 or so months, is that money going into those areas, risk off and a stronger narrative, or are people getting interested in that risk on appetite? And I think that's where these lows in the market will start to show. Is it going to come back to Bitcoin before this cycle peaks, before this 18-year cycle peaks, not the Bitcoin cycle, but before the 18-year cycle peaks? So we've already got a few of these signals here for Bitcoin heading down. Let's look for this low. Timeframes, well, it's hit its 1,000 days to the upside. This time was around 1,050. Last cycles was 1,060, 1,070. So it's right around that timing as well. That gives us another signal that Bitcoin wants to head lower, unfortunately. And USDT dominance, that has also been a pretty significant indicator of the weakness for Bitcoin and for cryptos. So you can see the USDT dominance, it's in the candles, Bitcoin's in the white bars. We've seen higher lows forming for USDT dominance, and we've seen higher highs for Bitcoin. So there's a bit of a discrepancy there and some divergence beginning to form where we've got Bitcoin heading down, USDT heading up, and for USDT, a breakout above these highs, and that high is we're calling it a 6.66, so a nice 666 number. That is probably going to cause the death of altcoins. Not for Bitcoin, but you'd see more of the signs of this old death of altcoin like we've seen in prior cycles, just those headlines. Now there's some even more interesting lows that I'm looking for in 2026 for any signs of another correction. And that's what I want to get to for the altcoins. But for the USDT dominance, we may see some sort of bounces for Bitcoin and cryptos, essentially Bitcoin at this stage. Once we get to this 6.66 level, and then we see this fall, that could be a good area for a bounce. If this continues to fall, great. Then we're back in business. If, however, pull back and a breakout, you're not in business. And we've got to look to the next tops. That's going to be around 8 to 8.5%. You can see the tops here, some of the candles here. Let's throw another line and just have a look at that and keep track of that over the coming months. So that's at around 8 to 8.5%. Over time, however, we know that stablecoins have continued to increase their market cap, so more and more have been printed. Therefore, this is going to, well, it may continue to increase, even with the stablecoins not being printed, like not extra liquidity coming into the space because of any sort of bear market. But even so, throughout this entire period of stablecoins going from $5 billion in the early days, all of the market cap was 5 billion, to now 300 billion, this has still worked. It has still produced many important turning points and signals through this entire cycle. We've gone through it before. We've seen where the lows and the highs form, and essentially it continues to work. So we'll keep watching this. This may, however, continue higher, break out of 8, break out of 9, but you're still going to see the patterns forming in the market when investors, the smart money, I guess, are seeing a little better risk reward return in Bitcoin or other altcoins, and they'll start to sell off their stable coins for, I guess, a bigger risk appetite. But at the moment, things don't look like that, and you can see it also with the stable coins combined here, USDT and USDC. A breakout of 9% is probably going to send things skyrocketing as well. You're going to see more of that death to altcoins or whatever the news headlines and narratives are at the time, similar to what we saw last cycle. And I think that's kind of the period that we could be going through now. I'm not saying this has to happen. I'm just saying this is the area we're at, and let's watch and see what happens once we get to the next resistance levels for stablecoins. So let's look at those. The 3-day signal, we saw that at each of these all-time high prices. I think you guys have seen me talk about this many times before, but if you are new, thanks. Subscribe, go through it every single day, giving you something that the masses don't typically like to hear. And I know from many of your comments over the several years that we've been doing this now, a lot of you didn't like to hear it here. I've received those comments 21 and early 2022. They said, I didn't like it, but then you came back at the lows, fortunately, and you realized that maybe this was the top. You know, we're not trying to say that we always get things right. We're just looking at the signals and the sentiment and the strength. And if things aren't showing up like they need to be that strong, then what's the point? What's the point of continuing to bull post and talk about a banana zone and talk about this this top that's going to make everyone rich again and to, you know, do all that sort of thing when the signals aren't showing it? And the reason I think those channels or those accounts do it is because talking about bullish content, buying the dip, up only mentality is better for business, way better for business. So me doing these sorts of videos does my channel no justice. It doesn't help anything from that point of view of more subscribers and more views and all this sort of egotistical stuff. Is just I'm sharing what I see in the charts, and hopefully you can learn from it, and over sooner rather than later, maybe over the weeks rather than the years like the last cycle of people did, you're going to improve your own strategies. You're going to improve your own trading and investing. So I'm not having a go at the influencers or the CEOs that do it for their funds or their treasury companies. It's up to us to avoid it and to see through anything like that. And of course, make your own decisions. That's what I'm all about on the channel. It's what I've been doing for many, many years. So that's our 3-day signal as well, which has shown many of the all-time highs, basically every single all-time high so far. The sentiment, absolute like crap. We can see that the Fear and Greed Index has been hitting new fresh lows. Now, that has typically meant a bounce. In a bull market, that typically means we're going to see some sort of bounce. But if we're in a macro downtrend, which the sentiment has been rolling over, just like last cycle, look at those highs, look at the sentiment rolling over, look at those highs, look at the sentiment rolling over. If you see the sentiment over here actually, and here, more importantly, in a bear market, which could still be early days, then you'll see the sentiment stay in the extreme greed to fear range for a lot longer than you'll see it up in the greed to extreme greed. Well, that just seems normal, right? That would make sense. You'd see it lower for longer and the price is still going down, rather than this being a low and it's quickly bouncing to highs. Okay, when does that turn? That was a really strong indicator. Unfortunately, we don't have any signs or any data from the prior cycle. The indicator I'm saying is the divergence, which I talked about in the videos on YouTube. You guys know many, many moons ago that we were seeing a divergence in the sentiment. So less fear, and the price was going lower on a long-term basis. That long-term was months. June low, November low, December higher low, January breakout, March higher low, and it continued higher from that point. So I think that's a good point to remind us that we have a TIA Pro Black Friday sale coming up real soon. And today I'm doing an Instagram Q&A for the next 24 hours. I didn't mention it in yesterday's video, so I'm doing it today. Use only the links in the video description, because there are many other accounts out there that are impersonating my account. They have thousands and thousands of followers, but they are not me. So make sure you're following this account, even if you don't want to engage with the Q&A. Just make sure you got the right account so that you're not looking at other stories, because they are really trying to go hard on the scamming at the moment. Okay, so that's the sentiment. In the last couple here, USD has been heading higher, which of course puts pressure on assets. And you guessed it, the Wyckoff distribution. Looking at that with our members, I posted about this a few weeks back. This was the distribution pattern, and now we've had the breakdown. So if you are interested, definitely check out TIA Pro and learn about all of those patterns we've been talking about. So the bottom, we've seen many of these signals. They might still have a little bit longer to play out. We know where some of them will eventually bottom out, but it's going to be a process and it's going to take some time. We haven't seen any of the breakdown of the $70,000 level yet, nor have we seen the overbalance in time, price, and time. We're seeing the overbalance in price. We're getting very close to price at the moment, so the longest correction overall, but we haven't seen it in time, which comes out in Q1 of next year. So it'll be the extension in time. Now, the lows I'm looking at in regards to Bitcoin and what we've seen in price cycles are against other assets. So Bitcoin versus precious metals, Bitcoin versus stock markets, the S&P 500, the Dow Jones, maybe even the NASDAQ as well. And so in price cycles, we've seen the price of these two assets when they compared against themselves, like how many silver ounces can one Bitcoin buy? We've seen some lows come out in two key areas. One, very simple, the support and resistance zones. Key support and resistance zones. Take silver as an example. Here was a low, here was the previous tops, here was the macro lower high, and that was at about, call it for a round number, 700 ounces. So one Bitcoin was buying 700 ounces at the low, but at the highs, one Bitcoin was buying 2,700 ounces of silver. So it was down a hell of a lot. And when it breaks down, especially past the 50% levels and the 50-week moving averages. Here is your 50% level. Right there was 1,500 ounces. It typically continues lower until it gets to the major support levels. So that is a key one that I'm going to be watching now that Bitcoin has broken the macro 50% against silver. So the macro 50% was 2,079 ounces one Bitcoin was buying. It now only buys 1,844 ounces, coming from a peak of 3,480 ounces. So you could nearly get double back in December of 2024. So about 12 months ago, one Bitcoin would buy almost double the amount of silver. And of course, silver's price is also moving in this time as well, which is causing even more selling pressure on this chart. Now that we've broken 50% and underneath the 50-week and getting close to the next support, roughly around 1,770 ounces, then I'm going to look towards the next lower levels, somewhere around 1,300 to 1,400 ounces for a low price there for BTC. There's obviously got to be a massive disclaimer here. Yes, I know it's a bit of a pain in the butt, but this is the first macro 18-year cycle Bitcoin has ever been through. It looks like metals have got stronger to run. It looks like they've got it further to run, even though they're going through some consolidation at the moment. And so the consolidation we can see here is with, as an example, gold. It's pulled back, put in a lower high. Going to consolidate somewhere between, for round numbers, and we'll cover this in future videos, get a little closer to the market between that sort of $3,500 and $4,300. Silver also putting in some tops around 53, 54 bucks. And you can see the previous breakouts when I made the video back here at 35 an ounce, could be down to 40-ish an ounce, 44 an ounce, more around that sort of 40-ish to 45 an ounce. That could be the area that it wants to consolidate. So if both of the assets are heading lower, but one is going down in larger amounts, so losing more value than the other, well then it's still going to head down on the chart. If Bitcoin is losing 10% and silver's losing 2%, well this chart is still going to head down. And in reverse, as we get to the end of the cycle, or into the peak of the cycle before the correction, should metals also correct and then rally higher because of some safe haven and the discussion of all of this liquidity with stimulus checks and QT ending, which is an assumed start to a QE, Fed cutting rates, another assumption the market has been continuing to make, the liquidity, global liquidity, etc., and you still continue to see metals climb, and Bitcoin is not in a strong position, then you could continue to see this thing fall. Okay, so it's not a guarantee that it gets to this level and then bounces, but what I'm suggesting is in prior cycles, it has basically been a magnet to at least get back to those levels. You can see where the breakout occurred and back where the support and resistance was before there was some potential of a base. If you start to see a breakdown, well then you got to continue to reassess, but for now, that would be one of the first targets I look at for a longer term target. Bitcoin versus gold, similar theory. Let's look at those areas. This was a big extreme greed breakout on the sentiment for Bitcoin. You can see back down around 16.5 ounces is a good area for that. Last cycle, again, Bitcoin collapsed roughly about 76% against gold's value at the time. Even though gold wasn't in a huge uptrend, it was still going through its consolidation through the bear market, which I've talked about as well, looking at metals going through consolidation phase while Bitcoin's in a bear market as another sign. The decline here, somewhere around that 8 or so ounces. So it was about 7 to 8. It finally bottomed at 9, but you could start to see where this area occurred, the breakout, and then the higher lows were at 13. So another safe entry there at 13, and then the price breaking higher. The prior cycle, you can see that Bitcoin versus gold, it also continued to fall until it got to that breakout point. That was the July-August breakout, correction, and then off to the races. So that was the time just before the major breakout into that final top. That's where Bitcoin versus gold bottomed. Bitcoin versus the S&P 500 also continues to break down here, now at the previous highs of 13.8. So basically one Bitcoin buys 13.8 S&P 500 contracts. What happens next? Well, let's look towards the 50% level, because we've seen in all prior cycles, Bitcoin has broken the 50% level. Let's take off the 38 to make it cleaner. So it's going to get down to at least 12, I suspect, if this is the breakdown of the cycle. However, if it's not the breakdown of the cycle, which we also need to worry about, then we should see a bounce off this level. And I think that is going to be one of those key areas talking about the Bitcoin bottom. When these charts start to find that low, then we can look to the price of Bitcoin and think maybe that is a key area for the low in Bitcoin. If there is a breakdown of these on their 50% levels, then we have to watch the next lows, and potentially Bitcoin will also continue to fall from that point. So to make it nice and clear, and we don't get too confused with the old up, down, sideways scenario, we're looking for the next support level. If it's the 50% and we see the price bounce, good signs there. There is a potential for further upside. But if we begin to see a weaker bounce and a breakdown, that would probably signal to look to the next support level. And we just got to follow those as the market plays out. And in the price cycles, those support areas have come out at key greed and breakout points from Bitcoin in the prior cycle. Here is one case in example here, October, November 2020. You can see that was through this period. And what happened in that period? We got a breakout into greed and extreme greed. So I think there is the chance that Bitcoin comes back to revisit those extreme greed periods. The next one is around that zone there of November, December of 2024. So that's what we're going to watch to see whether we can get this rally and recovery into another all-time high in 2026. Before I forget, ETH USD and XRP USD have also been pretty good indicators of low points in the market. Not to make this video go too long, here is a quick look at the monthly chart for Ethereum and also XRP. We've seen a high to a low for a bear market. That was about 12 months for Ethereum to that higher low in November. The lower low was 7 months. So only 7 months in that case. 7 months from this current top for Ethereum is March of 2026. That's quite close. 12 months is about August. Okay, so keep August in mind. We take a look at XRP on the monthly chart. We know XRP typically does 12 to 13 months in one direction, and for bear markets, it has done multiples of it, so 2 times that. Look at 26 months. This one was 3 times. There's 37 months, top to bottom. Okay, so if we've seen a top for XRP at the 12-month mark in July of 2025, then let's look at 12 months to the downside, and that's going to be July 2026. July, August, we've got a bit of a time frame forming here for Q3. Obviously, I'm going to start being on the lookout in late Q1 or Q2 because I'm not going to wait until the end of that point. Obviously, I'm here every day anyway, but the point is, don't forget about the markets until it's too late, which happens every single cycle. I know I bang on about it all the time, but I guess you guys that have been following, appreciate it. The ones who sort of flick on, flick off, they wouldn't be here at a 30-minute video anyway. So good luck to them. 12 months, we've seen it for XRP and for Ethereum. Of course, anything can play out in that time. We need to see if this cycle is going to continue to push one last big move. When I'm talking about cycle, I'm talking about the 18-year cycle, one last big hurrah. Otherwise, let's strap in and hopefully not get fucked by the old banana zone. Like and subscribe. I'll see you guys back with the next video. Cheers again, guys. Peace.